Okay, we had a question come up back when we were looking at the yen. So I'm going to go over to it and let you and explain what's happening here. The question was about the yen. At the beginning of that day there, we noticed that. Okay, here's the question. Why would I have not taken a short on this candle here that had a close below this barrier? And the reason why, well, they're thinking, okay, well, here you've got this whole thing here, and there's a close below this barrier, and there's a high for you to. Okay, let me explain why I would not take that trade. Because there was nothing establishing. In other words, okay, when you're doing these this is the momentum style of a trade. First of all, look at this trend line that's coming from the previous day, supporting it. But when you make those trades where you go past a barrier, like here when we took the long, it's because it's momentum. There's no momentum in this area at all. There's no momentum to the downside. There's no momentum. Okay, that's the difference. These are momentum trades when we do this kind of thing, when we get the close above or below. Now, if we get a close below here right now, it would be considered momentum. Okay, of course we're not getting it right now, but I'm just saying that's momentum. Now the other side is not momentum, it's support. Let me show you that. Here, the trade we took with the euro was a support trade. We took the support, and in a support trade you've got the trend line that breaks the trend line closing and breaching, as you can see what happened here. Oops, that's the wrong tool. There we go. Okay, that's the support trade. We had support down here. Okay, look at that triple head and shoulder looking thing there. Do you see that? Anyway, that's the support trade when you do the trend line. Now, back on the yen, you couldn't have done that there either, because remember you had the trend line coming in and supporting it. Now you could have done a support trade. Let me see if you can. Hold on, let me go back over there. Nah, no support trades here. Let me clear that up. Sorry about that. I'm going to draw for you. There's no support trade that you can take here, because there's nothing giving us any type of downtrend up over here. It's a channel, sort of. Now traditional traders would have done this without QuickView, and they probably would have got a few more pips. But as far as, well, would they? I mean, where would their target be without knowing what levels to take in terms of going long? I don't know. Maybe some do it this way. They'll say, okay, well, if I'm risking this much between here and here, I'm taking the long. If it breaks out over here, I'll be long here around the 93.03, say, and I'm shorting out underneath. This is roughly around about 92.75 or so they're risking 28 pips or 25 pips. So now they're going to look for 50 pip gain. That would have worked for them, but we rely on solid evidence. We look for solid evidence, and QuickView gives us solid evidence. And so but in answer to the question, that's why we would not take a move to the downside here, because it's not momentum, and we wouldn't try to do a support trade, because the support trade was from this trend line. Actually, we could have tried to go long at the point that we busted loose. That's true. Yeah, we actually could have, but we didn't see it that way, and that's okay. So I mean, we made our money. you know, on the yen, on the pound, and on the euro. Those were the good setups. Now the other pairs didn't really have good levels coming in. They didn't show. I'll show you real quick. Let me show them to you. Here we see the Aussie. Now the Aussie had good levels. Actually, we put in a trade to get the short if we got below this 91.73. It never came back to fill it, and still hasn't. And so we're out. We don't even want to bother with it at this point. Okay, we're done. Forget it. Never mind. All right, let's go to let's take a look at the Kiwi. Kiwi was a pain. It kept waking me up all night with alerts over and over and over again because I kept getting a close below this this level here, and then it would, you know, and just it was. So I just turned it off and said, forget it. I don't want to be bothered. So that's the Kiwi. Actually, I probably, if I hadn't been so frustrated, actually I would have gotten filled because I had the level at 7106 and the target down. It just, you know, well, it doesn't look like it made it all the way to 7069. Plus the fact that the Kiwi, one reason why I turned off, because Kiwi's got such a large spread. It's not a good scalping pair. Let's take a look at the Franc. Franc just ran away from us. Everything, it just never came back to fill anything. It just went down. You got to close below this barrier, never came back. Got to close below this barrier, never came back. It's just, yeah, nothing happened there. Okay. What else was there? The Canadian dollar. The Canadian dollar, where did we start from? Back here. There was just too many widespread moves here. Nothing concrete. They were just all even levels, very widely spaced out, with the exception of down here at this double support, which, as you can see, and actually, let me look at something here very quick. I can't get it to show that last level down here at 101.27. There it is. You can see it right there. It touched it and it's on its way. It bounced off of it and it starts ping pong. It'll probably just stay in between this range here for quite some time. Who knows? It might make a crash, but wasn't a good scalp setup because things were just too evenly spaced apart. Had this one level here, but what do you do after that? I mean, you know, there's no close below any, so there was nothing on the CAD either. So anyway, that's it. Basically, it was the euro, the yen, and the pound.